Okay, I have to start today with a number that it actually made me put my coffee down and just stare at the screen for a minute.
I know the one you're talking about.
$112 billion.
It's a massive number.
I mean, that's the amount of capital Brookfield Asset Management raised just in 2025. $112 billion.
To put that into perspective, you're talking about more than the GDP of a country like Ecuador.
In 12 months. It's mind-boggling. And, you know, usually when we talk Brookfield, we're talking about, well, the boring stuff, right?
Sure. Hydro dams, toll roads.
Concrete and steel. The backbone of the old economy. But yesterday, February 4th, they dropped their Q4 earnings, and the conversation wasn't really about concrete.
No, it wasn't. It was about AI.
All about AI.
If you read through that earnings call transcript, I mean, it felt less like a financial report and more like a manifesto for a new industrial revolution. They are pivoting hard.
So that's our mission for this deep dive.
Yeah.
We're going to look under the hood of these documents that came out yesterday and try to figure out why the world's biggest real asset manager is suddenly making a $100 billion bet on artificial intelligence.
And how they plan to pull it off.
Exactly. And we have to talk about the leadership change because there is a new CEO, which I feel is just a massive signal in itself.
Oh, it's probably the biggest signal they could send about where they see the next decade going.
Okay, so let's get right into it.
All right.
The headline that's got everyone talking, Segment 1, the AI infrastructure revolution. I kept seeing this phrase picks and shovels, but that feels a little tired, doesn't it?
It's a cliche, but let's update it for 2026. Think about the gold rush. You had all these people trying to find gold.
Right. The OpenAIs, the Googles.
Exactly. They're the prospectors. They're all fighting over who has the smartest AI model. Brookfield is looking at that and saying, we don't care who wins.
We just care that they all need something.
They all need electricity. A lot of electricity. The bottleneck has shifted.
It used to be chips, right? All about the GPUs.
For the last few years, yeah, it was silicon. Could you get enough NVIDIA chips? But now, the bottleneck is just... it's physics. It's power. You can have all the chips in the world, but if you can't plug them in, they're just expensive paperweights.
And this is where their full stack approach comes in. I really want to dig into this because it feels like a fundamental change in real estate investing.
It is.
Because historically, you just build the shed, right?
Yeah.
Pour the concrete, put in the AC, and hand the keys to Microsoft.
Right, the rack and shell model. A simple landlord-tenant deal. But Brookfield is saying that's not good enough, not fast enough for AI.
So what are they doing differently?
In the call, they laid it out. They're funding the shell, the cooling, the racks, the servers, the chips, and this is the absolute kicker, the power plant that sits right next door.
So they're not just building the room, they're building the entire computer and the plug.
And the power station behind the plug. And the insight here isn't just the money. It's the concept they kept repeating on the call. Bring your own power.
Bring your own power.
Yeah.
It sounds like a party invitation.
Well, it's born out of necessity. Management was really blunt about it. The public utility grid is just too slow.
Too slow.
Yeah, I mean, if you're a hyperscaler like Amazon, you're in an arms race. You cannot wait 7 to 10 years for the local utility to get permits and upgrade a substation.
And you need to be online, what, yesterday?
You need to be online in 18 to 24 months. So Brookfield says, fine, we'll do it ourselves.
And they can because they own all the green energy stuff.
Exactly. They use their renewable power arm to build solar, wind, battery storage right on site. They literally bypass the grid. They even mention things like Bloom Energy fuel cells and nuclear.
Wow, nuclear. That's a whole different level of commitment.
It is, but you need that 247 baseload power. And if you're the only landlord who can guarantee the power is there and it's there now,
you can charge a massive premium.
A huge premium. And more importantly, you can lock in what's called a take-or-pay contract.
Okay, unpack take-or-pay for us.
It's simple, really. The tech company agrees to pay for a certain amount of power every single month for, say, 15 or 20 years.
Whether they use it or not.
Whether they use it or not. So if their AI model doesn't take off or demand dips, Brookfield still gets paid.
It turns a risky tech venture into a boring, stable, utility-like return.
That's the holy grail. That is classic Brookfield.
Now, there was another term that jumped out at me, sovereign AI.
Ah, yes. This is the geopolitical layer.
It sounds like something from a spy movie.
Well, it's this realization that AI isn't just a commercial product. It's a national security asset. Countries, France, Japan, the UAE, they're waking up and saying, wait, we can't have our citizens' healthcare data or our intelligence sitting on a server in Virginia.
They want it inside their own borders. subject to their own laws.
Correct. And Brookfield just announced a $20 billion joint venture with the Qatar Investment Authority, the QIA, to do exactly that, build this integrated AI infrastructure domestically.
So if you're a country and you want your own AI, you call Brookfield to build the whole system.
Because almost no one else has the capital and the expertise to do it at that scale. It completely redefines infrastructure.
It's a huge pivot. And to turn a ship that big, you need a certain kind of captain. Which brings us to segment 2, the changing of the guard.
A very big moment for the firm.
Conor Teskey is the new CEO of Brookfield Asset Management.
And Bruce Flatt, who's been the face of Brookfield for decades, I mean, the Warren Buffett of Canada,
Right.
He's staying on his chair, but handing over the asset manager is significant.
And Teskey, he's young. I think someone on the call pointed out he might be the youngest CEO in the major asset management space.
He is. But I think in this case, that's actually reassuring to investors.
How so?
You have to look at where he came from inside the company. He wasn't running office buildings. He built and ran their renewable power and transition business.
Ah, so the green energy guy is now the everything guy.
Precisely. He was the architect of this whole strategy. By making him CEO, the board is basically screaming that the future of Brookfield is energy transition and digital infrastructure.
It's not a side business anymore.
It's the main event. And Flatt was careful to say it wasn't a shakeup. He called it matching title to substance.
Which is just corporate speak for, he's been doing the job for years. We just finally gave him the title.
Laughs, pretty much. But it signals stability, and investors love that. The strategy is locked in.
Okay, so we have the plan, we have the leader. Now let's talk about the fuel for all this. Money. Segment 3, the money machine. Because you don't raise $112 billion just by calling up a few pension funds anymore.
No, the landscape there is shifting dramatically. They still have their big institutional clients, of course, but the real growth engine has moved.
The report kept highlighting individual investors and private wealth. That channel grew by over 40% in 2025.
It's massive. This is the democratization of private assets that we keep hearing about. 10 years ago, if you were, a regular person saving for retirement, you couldn't just buy a piece of a dam in Brazil.
The velvet rope was definitely up.
Now that rope is coming down. Their wealth division raised almost $9 billion in Q4 alone. They're creating products specifically for 401ks for individual portfolios.
Why now, though? Is it just that Brookfield needs more money?
It's a two-way street. For Brookfield, the private wealth market is trillions of dollars. It's a huge untapped pool. For the investor, it's about income and stability.
Right, you're looking for something that's not as volatile as the stock market.
Exactly. You want something that's protected from inflation. A toll road, a pipeline, a data center. They tend to have these really durable cash flows. And with interest rates stabilizing, people are hunting for that kind of yield again.
So my retirement fund starts to look a little less like a tech portfolio and a little more like, well, a pension fund.
That's the pitch.
Speaking of volatility, that leads us perfectly into segment 4. Credit? Because there was another huge announcement. Brookfield is buying the rest of Oaktree Capital.
Right. They're taking it to 100% ownership.
And Oaktree, for anyone who doesn't know, they're legendary for distressed debt. They thrive when things go wrong.
That's their reputation, Howard Marks. They're famously counter-cyclical.
So why does Brookfield, who's busy building all this shiny new stuff, want a company that profits from things breaking?
It creates an all-weather business. That's the key. It smooths out the ride. Think about it. When the economy is booming, Brookfield's equity side is printing money.
Yep.
But when the economy crashes or credit gets tight and banks pull back, that's when Oaktree shines. They step in and lend money when no one else will.
So, heads I win, tails I win.
That's the goal. And by integrating them fully, they become a one-stop shop. A company can call them up and say, I need money, and Brookfield can say, okay, do you want a partner or do you just want a loan?
And the report mentioned banks are pulling back from this kind of lending.
Yeah, post-2008 regulations make it harder for banks to make these big, complex, long-term loans. Private credit players like Oaktree are filling that void.
So the banks step back, Brookfield steps in.
And earns a very nice interest rate for their trouble.
Okay, we've talked a lot of high-level strategy. I want to ground this. Segment 5, real-world examples. Let's look at what they actually bought.
It's a really eclectic mix. It shows you how broad the definition of infrastructure has become.
Let's do a quick round. First, Mio-In.
A French renewable developer.
Yeah.
This is a pure play on that power-hungry AI strategy we talked about. More solar, more wind, it's the fuel.
Okay, next, Hotwire Communications.
Fiber to the home in the U.S., the digital plumbing. You believe data consumption's going up, you have to own the pipes that carry it. Simple enough. Then there's one that completely threw me. Generator hostels.
Yes, high-end hostels.
I mean, I'm picturing backpacks and bunk beds. Why is a multi-billion-dollar asset manager buying hostels?
It's a bet on experiential travel. They see that younger generations still want to travel, but they can't afford a Hilton. But they don't want to dump either. They want a cool design space with a bar. It's actually a very high-margin business.
Huh. Fascinating. And then, National Storage REIT in Australia.
Self-storage, the ultimate boring business.
Hmm.
But the thesis is solid. Urbanization, smaller apartments, people need a place to put their stuff. It's basically recession-proof.
Because once your stuff is in there, you're not moving it.
The customer stickiness is incredibly high.
And finally, a big one. Colonial Pipeline.
The largest refined products pipeline in the U.S. If you're on the East Coast, the gas in your car probably came through that pipe.
Now that is what I call critical infrastructure. And it has what they love most. High barriers to entry. You can't just go out and build another one. So even with all the AI hype, they're still buying pipelines and storage units.
The diversity protects them.
Exactly. The cash flow from the pipeline pays the dividend while they wait for the AI bet to pay off.
So let's talk about that dividend, the bottom line. Segment 6, financial health. If I'm an investor, how am I feeling after this report?
You are feeling pretty good. The board approved a 15% increase to the quarterly dividend.
15%. That's an aggressive raise.
It's a huge signal of confidence. Management is telling you they expect cash flows to keep growing at a double-digit rate.
They did say their outlook for 2026 was mid to high teens growth.
Which is very strong. They have a few big deals closing, and crucially, all of their main flagship funds are going to be in the market raising money at the same time this year.
And they have the cash to make moves if they see an opportunity.
Oh yeah, they have about $3 billion in cash, but the really important number is uncalled fund commitments.
The dry powder.
The dry powder. It's $134 billion.
Wow.
That's money investors have legally promised to give them, but they haven't asked for it yet. It means if a giant opportunity comes up tomorrow, they can write the check.
It's a massive war chest.
It puts them in the driver's seat of any negotiation.
So let's wrap this all up. We've gone from AI in Qatar to hostels in Europe to storage units in Australia. What's the big picture?
The big picture is that Brookfield has successfully pivoted from being a traditional asset manager to being a giant that sits right at the center of the three biggest trends for the next decade.
Digitalization, decarbonization.
And private credit. They've totally redefined infrastructure. It's not just bridges anymore. It's dynamic. It's the server, the battery, the fiber optic cable. They are owning the backbone of the new economy.
It leads me to one last thought, something I was mulling over reading this. We always say data is the new oil. But you can't have data without electricity. So if the real bottleneck for the entire 21st century economy is power, and Brookfield controls the renewable power and the data centers where all that power is used.
That's a very provocative question.
I mean, have they effectively cornered the market on the most valuable commodity of our lifetime?
Well, when you own both the plug and the socket, you are in a very, very powerful position. It's certainly not a bad place to be for the next couple of decades.
Something to think about next time you ask an AI a question. You might just be powering up a little piece of the Brookfield empire. Thanks for diving in with us.
My pleasure.
We'll see you next time on The Deep Dive.